Everyone, it's Mark Boardman here. It's Wednesday the 29th of August. It's 6 p.m. UK time. 6 p.m. UK time. Got quite a few trades to go through here, covering the last couple of days. I've discussed these all in today's in fact all bar one I've discussed in today's trading room, because I've got one that I entered which we're looking at right now after the trading room. So but you can see I've entered the trade here with the green dotted line here at the top, which is the entry, if you can see here. Okay, so let's just, without further ado, go through because today was the first trading room since last week, and on Tuesday we have here a pound Kiwi long. This is based on the 4-hour fat man, which is the 1 hour chart. I'll just show you where that came from. Here is the 4-hour fat man, and here is the pound on the 4-hour fat man. Can you see here? This is the orange line coming to the bottom, can't stay down that much longer. This is the Kiwi heading south. Okay, now at this point in time we had 3 other currencies heading the other way. Remember that this FX trend catcher system, you're waiting for any of these lines here to go to the top or to the bottom, and then you look at what they're going to turn, right? They always turn, so you're then looking for the lines coming in the opposite direction, and they're the pairs to trade. So at this point here, this turning point here, we had the pound versus the Kiwi. This is the dark blue line. We had it versus a sinking Japanese yen here, and also a sinking US dollar here. Now as it happens, 2 of those 3 were trades. There was the pound versus the Kiwi, the pound versus the US dollar, but the pound versus the yen didn't actually give me a signal. So this indicator on its own isn't enough. This is just step 1. Okay, I'll show you the 2 trades that it did give me a signal on. This is the first one. This is the pound. This is the Kiwi. This was yesterday. Okay, and this was still in this trade. So it's now Wednesday afternoon, and we're still in this trade. Well over 100 pips of profit there. What you can see here is how volume price analysis is very clever. It tells us that there isn't enough selling here for this to turn, so it keeps us in the market. We only come out of the market when we get a close. Excuse my doggy there, proves it's live. That was a beep outside. This is we only come out of the market when it closes beyond the cross. It can come below the cross, but it has to close below that cross, and as you can see here, the market didn't. That kept us in the market, and we're still in the market right now, well in excess of 100 pips profit there, and that will continue. We also had one on the pound versus the US dollar. That got us in here too, but we did actually come out of the trade here because of a cross touch of this what's called the crash barrier here. Okay, bit of volatility there in this pair, so we came out of that trade there. So if we go back to here, we've got this one here, which is the pound versus the Kiwi, still going strong. This was the pound versus the US dollar here, which came out with a 9 pip profit. We then had a signal on the 15-minute fat man, which was the Kiwi long this time against the Japanese yen. Let me show you where that came from. Okay, that was here. Can you see my arrow here? This is the Kiwi at the bottom. This was earlier this morning, and this is the Kiwi coming up, and we have heading south very rapidly the Japanese yen. Okay, so that means that we're going to now look at the Kiwi getting strong versus a weakening Japanese yen. So we just wait for that to kick in, and that's what happened here. Can you see? This was it in going in the opposite direction. This is the Kiwi turning. This is the Kiwi getting stronger, the yen getting weaker. We got in here. There was quite a volatile move here. That closed below the crosses there, and that's where we exit the market. Okay, so that gave us another 8 pips of profit. So we've got roughly 100 pips profit in that one, although that's still obviously to close out. But I anticipate that closing out with at least 80 to 90 pips profit. Then we've got a 9 pips and an 8 pips. Since then we've had in one almost break-even trade here. This is the Aussie yen called in the room. Let me just show you where that came from. 15-minute fat man again. Just give the There we go. This was the yen coming up here again this time, this purple line. This is while we're in the room, and we had the red line, which is the Aussie, coming down. Okay, in fact it was at this point here that I called that trade. Occasionally we get these bobbles at the bottom. That's just part of trading. You know, we don't live in fantasy land is my favourite saying, and there's no such thing as 10 out of 10 winning trades. You have to take your winners and your losers. So but this one here was a virtually break even. I'll just show you on the chart. Let me just pull it up here. There we go. And this is where we got in here. We actually put a pending order in here, a pending sell stop, which got us in at this price level here. You can see here we were kept in the market here. The market didn't close above those crosses. It did come down, but then it pulled back again. So we were closed out. Can you see where that candle is there? Just there, which was literally 1 pip above the entry. Okay, and then we had the Swiss franc versus the Japanese yen, and this was a bigger loser because we were in a sell signal. Let me just find that for you here. Can you see where my crosses are? And this did actually pull back against us and close above the crosses there. So that got us out the market there. I'll just show you how I got that signal. That was the same principle with the yen here rising, and at that time the white line, if you can see here, was the Swiss franc. But as you can see, the Swiss franc didn't carry on down and it pulled back. And as I say, that's what happens with this system. You can never expect to get all winning trades. Now just after the room here, I've got a trade placed, which I'll show you now. In fact, I showed you at the start of this video. It's this Kiwi on the 4 hour now. The Kiwi's threatening to turn round. We've got a green line coming down, which is the euro. We've also got the white line and the yen both heading down, so we can look at all three of these versus the Kiwi. As it happens, as I speak to you now, that euro has given me a signal. The Kiwi may give me a signal, and the Swiss franc may against the Kiwi, but they haven't yet. I'll just show you the euro one. That's here, can you see? So we've got the red Hawkeye volume here. It's the only software that I'm aware of, unless you can tell me different, on the planet that takes brokers tick data and tells you whether it's buying or selling volume. You've then got something in the middle called a heat map. This is a momentum indicator. When you've got bright red and bright green, it's telling you you've got momentum. Okay, and then finally you've got your trend dot here at the top. Now when that's red, that means we're in an overall downtrend. So once you've got red dot, red heat map, red volume, in this case that's your signal to sell. Okay, so we've got a short on the euro versus the Kiwi there on the 1 hour chart, which is based on that there. Let me see if I can just pull up, it'll be the yen the Kiwi versus the yen on the 1 hour. So if we look on the 1 hour here, just pull that over. As you can see here now, we're looking at the Kiwi strengthening against the yen, and we don't yet have the right signals. Okay, with the euro versus the Kiwi, by the way, that would be a sell, wouldn't it? Because the euro's weakening, the New Zealand dollar is strengthening. It's the other way round here, strengthening Kiwi versus a weakening yen. We're looking for a long. Okay, it's just the other way. And as it happens, we've now started to get a dark green heat map. We can see a bit of buying volume coming in, but we still have white trend dots. Until we see green buying volume, bright green momentum, that's your heat map, and a green trend dot, then we wouldn't be entering that trade. So this is why volume price analysis keeps you out of trades until it's the right time. Why? Because that validates what's called the breakout. This system validates proper breakouts, and it's trading successful breakouts which is the difference between staying in trends for a long time or not, as the case may be. The other one was the believe it was a Swiss franc. Let me just check again. Yeah, so we've just looked at the euro. That's the trade we've entered. Can you see I'm only looking at the currencies that are heading south in opposite direction to where this Kiwi is going to go. Okay, the yen's not kicked in. The other one is a Swiss franc, so we're looking at the Swiss franc versus the New Zealand dollar. So let me try and find that one. Just give me a second, it'll be here somewhere. I think I've missed it. You've probably spotted it as I've been talking to you. So let me just, it's at the bottom here somewhere. It's a there it is. So similarly here we're looking for the Kiwi to strengthen versus a weakening Swiss franc, and it looks very much like the yen. Okay, we've got a green heat map, white trend dots which are in congestion but not enough green volume. So basically what volume price analysis has done for us here with those three, let's just remind ourselves of this euro here. It's given us a signal here. It says you've got your red volume, you've got your red heat map, you've got your red trend dot, you're okay to enter the trend. With the other two, it's not given us that confirmation yet. So even though this pattern here looks very similar with these three colours heading down and this Kiwi here, that's why you have to have your volume price analysis. Okay, but notice with this indicator here, the currencies almost always, not always, but almost always snap back to the middle. They always 100% of the time come back. It's how fast they snap back that makes the trends, if you like. And what you'll see is that far more than half the time they snap back quickly, and that's all you need to know. Currencies cannot stay overextended to the upside or the downside consistently in any time frame, whether it's a 4-hour, a monthly, a weekly, or even a 1-minute chart. So this is your step one. You just wait for these lines. You don't look for the trade, let the trade come to you. Once you can see these lines, you look for the opposing lines, then you look at your volume price analysis indicators and enter the trade. Okay, so they're the trades for today. Just to recap, I've really summarised 2 days of trades here. So far we've got a couple of winners here, a couple of losers. We've got a surefire winner here in the pound Kiwi, which is going to be quite a big winner there, and obviously we've got this euro versus the Kiwi here. Notice by the way that I don't mind in different time frames having a currency heading in the opposite direction, because if you're in different time frames it's a different trade altogether, so I have no problem with that. So we'll see how this one goes over the course of the next few hours. We'll see how long this pound versus the Kiwi lasts, and I'll update you again tomorrow. So thanks for listening. If you want to be part of the trading rooms, then at the top of my website, hawkeyemt4.com, there's an email form you can fill in. That'll add you to my email list, and I'll send you out the invites. Thanks again for listening, and I'll see you all again soon. Bye bye.